when you're working with clients, at what, I guess, when do they come to you and meet with you? Is it after they, when they're getting ready to buy a building, after they close escrow? Are they coming to you while they're kind of holding real estate? And what do they want? What does kind of that initial interaction look like?
So I get introduced to clients either before they close on a property or after, or if they are introduced to me and they've owned properties for a certain amount of time. So when I get introduced to a client before they purchase a property, they just want to know what the tax benefit they might receive from doing a cost segregation study. So it's more for tax planning purposes, right? So they would have a conversation with me just so that they could see how much of a tax benefit they would receive. They also, I may get introduced to them after they've closed on a property, and then, you know, because after they own the property, then they can do this cost segregation study and reduce their tax liability. Also, going back to, I may be brought in before they close on a property. If we're talking about a 1031 exchange, the reason why they would be introduced to me during that process, is because with the rules, with the 1031 exchange, the client would want me and my firm to do a cost segregation study on the property that's going to be relinquished. And then they're going to want me to do a cost segregation study on the new property, just to maximize the tax benefit they would receive on having a study done on both properties. Because otherwise, if we're just looking at the new property in that 1031 exchange, they're going to be limited to how much of a tax benefit they would receive, you know, versus if they had done it on both properties. So that's another reason why they would bring me in during that 1031 process, 1031 exchange process. Also, estate planning attorneys or CPAs would bring me in if there's a death in the family. So even if the deceased did cost segregation on their real estate, the depreciation clock restarts for the heirs. So once the step up in basis happens, then the heirs can do a cost segregation study because that depreciation clock restarts for them. So those are some of the different scenarios in which and when I would be brought in.